Welcome back PSP source guys. In this video we are going to see a balance sheet problem of final accounts, problem 1. So before workout our problem you have to recollect the pro forma of balance sheet. It was uploaded in my channel. So this is the sum I have prepared for you guys. The following ledger balances were extracted from the books of Varun Limited as on 31st 3 2013. Land and building given. Land and building means tangible assets. So it's come under tangible assets. The debenture given, it come under long-term borrowing. If we are going to prepare profit and loss statement, then we need to calculate interest on debenture. Interest on debenture on debentures, that is 12% of 2 lakh. But in this video, we are only going to work out balance sheet. So no need to work out any interest on debentures. Then share capital given, it comes under shareholder fund in balance sheet. Plant and machinery is tangible asset, so it's come on asset side of balance sheet. Goodwill given, it will be shown under intangible assets. Investment will be comes in non-current investment of assets. General reserve comes under shareholder fund next to share capital. Stock in trade given. Stock in trade is nothing but it is an inventory. So it's come in asset side. Next, bills receivable and debtors given. Both will be showing under trade receivable. Creditor comes under trade payable. Bank loan unsecured given. It's come under in short-term borrowing. Provision for tax and proposed dividend given. Both will be shown under short-term provisions. So for preparing balance sheet, first of all we have to write company name and the statement name on the top of the solution. Top of the solution with the date, month, year, which was mentioned in the problem. So here I have written Varun Limited as company name and statement name of balance sheet as on 31st 2012. So here I have prepared particular note number, rupee column separately for preparing balance sheet. After that, we know that balance sheet have three main categories, that is balance sheet have two main categories, that is equities and liabilities and assets. Now we'll discuss step by step. Under equities and liabilities, only three subcategories we are going to work out step by step. First of all, shareholder fund. Shareholder fund means owner's fund, that is share capital, reserves and surplus. So I have shown share capital in note number 1. Note number 1, equity capital at rupees 10 lakh. If authorized capital given, then we should not take it. We simply skip it that amount. We just focus only subscribed or issued capital. Suppose calls in arrears given, then we should deduct its balance from share capital balance. Suppose calls in arrears given, then I could have deduct its balance from share capital balance. Next, I have shown reserves and surplus in note number 2. Here only one general reserve given, so no need to deduct any appropriation from general reserve. Next, for current liabilities, long-term borrowing given. Borrowing means loans or debentures. Here 12% debenture at rupees 2 lakh given. I have written long-term borrowing note number 3. Next, short-term borrowing, trade payable, short-term provisions and other current liabilities. I have shown under current liabilities. Short-term borrowing comes in note number 4, bank loan at rupees 1 lakh. Trade payable comes in note number 5, creditors at rupees 1 lakh. And provision for tax at rupees 50,000, proposed dividend at rupees 55,000. Together it comes to rupees 1,05,000 in note number 6. So next, no other current liability given. So I just put it as nil in balance sheet. So if you total up these three subcategories, that is shareholder fund, non-current liability, current liability, you will be getting rupees 17 lakh. 17 lakh of total liabilities. After that, we move to work out assets. We know very well asset is divided into two categories, that is fixed asset and current assets. Tangible assets, intangible assets and non-current investment are fixed asset. Next, trade receivables, inventories, short-term loans and advances, cash and cash equivalent and other current assets are current asset as we know. Now tangible assets given land and building at rupees 2 lakh, plant and machinery at rupees 8 lakh. Together it gets to rupees 10 lakh. I have shown this tangible asset in note number 7. I have shown intangible assets of goodwill at rupees 2 lakh in note number 8. Then we can write investment at rupees 2 lakh under non-current investment in note number 9. Bills receivable at rupees 50,000. Debtors at rupees 1,50,000. Both it gets to rupees 2 lakh in note number 10. Next, inventories given. I have shown directly in the balance sheet, so no need to work out any note number for inventories. Here, no entry was given for short-term loans and advances, cash and cash equivalent and other current assets. So I have shown in nil in that column in balance sheet. So finally, if you total up these two subcategories, non-current asset and current asset, we are also getting at rupees 17 lakh. Thanks for watching.